Hello, everyone. Welcome to BlockRocket's panel, Blockchain and Regulatory Compliance, organized by Disrupt Network. So before I hand over to Saga, our moderator today, to introduce the speakers, I would like to give you a quick introduction about the event logistics. So as this event is going to be big, everyone is going to be muted except for the speakers. If you have any suggestion or discussion during the talk, you can scan the QR code here to join our WhatsApp group and post your questions, and also to keep in touch so you can discuss about blockchain regulations topics. That is from my side. I hope you enjoy the event today. And Sarah, can you make a quick introduction, please?
Sure. Let me quickly share my screen. Thank you, Alexandra. So welcome everyone to our another panel event on to discuss blockchain and regulatory compliances, what's happening in our space, and which is I think also a hot topic. Before we start, I would like to introduce about myself. So I'm basically Sagar Barwalia, head of venture development of BlockRocket, and we are like early stage startup investor based out Germany. We do investment into early stage startup, mostly like a pre-seed and seed startup based in blockchain space. And as we are located in Germany, but startups should not be located in Germany, we invest around the world. And once we invest into startup, we help them with the matchmaking and marketing and advisory and mentorship. Our ticket size is up to like 250,000 euro in the seed round. So this is our ecosystem where you can see we receive like approximately 200 plus applications per year. On top, as I said, like our ticket size is average around 150 to 250K. And we do 5 to 10 investment per year. We have 250 plus partners around the globe, which includes like blockchain infrastructure provider companies, corporate law firms, and also venture capital VCs. So in nutshell, you can consider us as very blockchain agnostic, as you know that the other acceleration program, which is Techstar, plug and play, and like a Y Combinator. So we might be like a smaller version of it, and we are very well located in Germany. So German ecosystem is highly relevant for us. We have sophisticated application process, which takes 4 to 6 weeks before reaching out to the decision. Of course, this is our team. So if you are looking for funding, or if you are also planning to shift your career into blockchain space, then feel free to reach out to us and we might help you with that. And let's keep in touch. And now moving forward, I would like to start the discussion about the regulatory compliances in blockchain space. But before I start, I would like to ask for all of our wonderful speaker panelists to introduce about themselves. So let's start with Tim from Wendley.
Hi, I'm Tim Dirksens from Wendley. I'm co-founder and CEO, and what we're doing is we're making blockchain technology simple for businesses. This, on the one hand, as a custody provider, and on the other hand, as a tooling provider.
Thank you, Tim. Then moving further, we have Pierre from Scorecam.
Hi, thank you. I'm Pierre, I'm co-founder and CEO of Scorecam. So we are providing blockchain analytics today mainly for crypto AML, and we have more than 100 customers in 36 countries, and we started back in 2015, so a long time ago in the crypto timeline.
Then moving further, we have two special guests, even though they are right now in Amsterdam at Money 2020 and taking their time to join our panel. So we have Ali Reza.
Hello, everyone. Nice being here today with you and talking on this hot topic. It's Ali Reza. I'm a German lawyer, and I'm also an advisor to the BFG, the Blockchain Founders Group. I'm focusing on regulatory and doing advice on DLT and blockchain since very early 2014. And you can ask me anything in relation to the German regulation of crypto assets.
Thank you, Ali Reza. Last but not least, and I think everyone knows him in DACH region, especially we have Thomas.
Thank you very much, Saga, for having me. It's a big pleasure to be here and to join you for that panel. I'm an attorney at law from Liechtenstein, so my main area of focus is actually Liechtenstein and the European laws. I started 2011 with Bitcoin, and then 2013 I started as a legal professional to analyze what is really going on. And I think what is worth noting is that I was a part of the work group of the Liechtenstein government writing this Token Act or TVTG or Blockchain Act, as people know it now.
Thank you, Thomas, for joining us. And thank you all of the speaker for the introduction. So moving further, I would like to start with, like, I have some words to tell, like there's lots of happening, especially in our space. I'm talking about like crypto space, crypto industry specifically. And if you've seen that in last couple of days, there's lots of blood on the street. And yesterday, the HEC chairman, Gary Glancer, was talking about also like he wants to regulate the crypto industry before it goes to the south side. So I would like to ask specifically this question to Thomas and Alireza, both of you. Maybe if Thomas can go first, like what's the current sentiment in crypto industry you can see in terms of regulation?
Alireza, would you like to start, my friend?
You start, Thomas.
As you wish. No, I think like what we need, what we see now is this battle, or if you want to call it that way, that it's now on every regulator's desk. There is something crypto, we have to do something. And you see good approaches, but you see a lot of actually approaches where regulators just, they have bad cases in their mind, or as you said, there is now a risk, or there's a big risk involved, and we really have to solve that. And what you see is that because the pressure they give themselves, actually, because they say, like, we have to find a solution because there is a big problem. For example, money laundering or financing of terrorism, we really have to get rid of that in the crypto space because the overall volumes are just were increasing rapidly. And if you don't have enough time to understand what is really going on, you end up with like not really good approaches, and that's what we see, and that leads to frustration, I think, because if players in the crypto space want to be compliant, and that's the perfect topic of today's panel, like if you want to be compliant, you have to know and you have to understand the regulation. But if the regulation is not like very good, or for example, that there are some pieces where at the moment from a technical point of view it's just not impossible to comply. And that leads to a lot of frustration, I think. And I think everybody understands that, yes, we are in 2021. Yes, there will be regulation. There will be, and for good reason, some areas will be regulated, you know. But I think there's a lot of frustration because it's like it's not out of nowhere, but it's just like the pace you see with new regulatory approaches is just increased rapidly as well. And it's hard for the industry to deal with all of these new approaches and to keep the pace, actually.
Understood. Thank you, Thomas. Alireza, would you like to add something here?
Yes, just to add something very short. I see it similar, like Thomas sees it. I would just add to that I believe that the regulator, German regulator, Liechtenstein regulator, any regulator within the European Union, is trying to seek a balance between pushing the blockchain innovation, the blockchain strategy of each jurisdiction, and at the same time trying to protect the market, its own market. So either you have big players like big exchanges, which I don't want to name here, which get issues because they do not run a proper KYC and AML, and this is where the regulator really jumps on and looks at it. I mean, KYC and AML are really like I would say like the thing which you should always look at and try to comply with. But at the same time, I think now when we look at this blockchain strategy from a German perspective, I think even the German regulator is not trying to stop innovation from the beginning, but there are some certain mandatory rules you should comply with, and then it is working actually. And as I said it, and Thomas said it, but we should repeat it again, KYC and AML are like the big issues you should definitely focus first.
Understood. So now, like after listening to Thomas and Alireza, my question to Pierre, which is like, so now Thomas and Alireza already mentioned like what should be done and what should be not in like a brief, but like what major roles plays here like blockchain analytical solution providers, like company like you, what major roles you can play when it comes to regulatory side?
Yeah, thank you. Yeah, we try to provide KYT, so everybody knows KYC, know your customer, and we are know your transaction. I think it is a brand new and blockchain ecosystem. Things are quite different from the traditional finance sector. Today, basically in the traditional financial sector, you have some banks and you have transactions. So you know the banks, but you don't know, or you know the institution, but you don't see the transaction. In the blockchain, it is the opposite. You see the transaction, but you don't see the entities. You don't always know who is behind. So our role is to track, to be able to follow all transactions in the blockchains, to be able to identify or to identify maybe a service, or to at least to assess the risk associated to these services based on the incoming transaction, outgoing transaction, some behaviors. So our role is really to help our customers to comply with the regulation. The regulation KYT it's the same, it's always the same. If you have a transfer of values between two counterparties, you have to identify the source of funds and the destination of funds, and to see if it's legal, if they receive the funds in a legal way, and they spend the fund in a legal way as well. So this is how we help today. And by monitoring the blockchain, we'll be able to, and in real time, so there are two big differences with also the traditional sector. We are able to monitor this in real time, and you have a full archive. So you can retrieve any transaction in the past, even 10 years ago, okay, which is impossible in the bank, almost in the bank. So our role is to build a map of the blockchain and to make the blockchain's transaction understandable by a compliance officer and by our customers.
Understood. So now moving further, like Wendley is offering the wallets as a service, right? So Tim, what kind of what do you see from your side as being a startup entrepreneur? Like which kind of hurdles you are facing in daily job when you want to offer some product under the Wendley umbrella, and there is some uncertainty of the regulatory side. So what are the major hurdles you are facing right now?
On the one hand, it's knowing when you have to be regulated or have a license. And right now we're facing a lot of discussions about, are you offering a custody solution or a non-custody solution? Because there's a difference in legal and technical interpretation. And I see that a lot of the startups, they're hiding behind technical interpretation, while what we're trying to do is follow a legal interpretation, which is a lot broader than the technical implementation. So here we're then discussing with Alia at the moment to see how we can actually get, for example, the BaFin license, how and when we should be compliant in that regard, because we're currently in Belgium, but pretty soon, if you want to start offering solutions in Germany, then I think the BaFin license is something definitely applicable for us.
Understood. So now I think that is really good questions. And my next question comes to Alireza, like, what is the difference between custodian and non-custodian? Basically, when I talk with some startups, they say like, okay, we don't hold the private keys and we don't keep the assets of our clients. That means we are like self-defined non-custodians. So, I mean, can you differentiate this? Like, what are the rules specifically in Germany? I mean, I'm sure like even you are not holding the assets, you still comply as a custodian. I think some sort of, maybe you can a little bit put focus here and explain us.
Yeah. So what I'm telling you now, it is published by the German regulator BaFin on their guidelines on the crypto custody service. Everyone can Google it up and they find it. I think it's even in English. It's in German and English. And BaFin and also the law differentiates, because the law says providing crypto custody service is doing it to keep secure or to hold the private keys or the crypto assets on behalf of the third party. So if you read it in the other way around, which says, okay, if you are the third party and you're doing it for yourself, so holding the private keys or the assets by yourself, then this is not regulated. But however, the complexity is in the detail. You have to differentiate which technology you're using for your custody service. Is it multi-sig? Is it MPC? So this makes a big difference, first of all. And secondly, also, which parties are involved in this whole scenario. If it's like a very simple scenario where you say you have only someone who's building like a white label wallet solution and everything. So the key charts, the key itself, the key parts, the assets, everything is lying with the client. This is a straightforward case. There you can say, okay, this is self-custody and this doesn't need regulation. But usually this whole scenario is more complex because you have a couple of parties involved in that whole thing. And in some cases, like for example, solutions which IBM is offering with MPC solution, IBM is securing the private key but does not have access to the crypto assets. And the client, the end client, has access to the crypto assets because this client is building up some kind of pin and some kind of code, and only the client has access to the assets. Even that case, even though IBM is securing the key somehow, I would say it's self-custody and not regulated crypto custody service. But as I was trying to say, it really depends on each case. You have to look at each case. There's not like a rule of thumb to say, if you do this or do that, you're self-custody or you are regulated custodian.
Understood. So now moving further, like Thomas, what is your opinion in terms of like Liechtenstein is a little bit ahead in terms of like taking the regulatory offerings and like some kind of disclosures, right? So what do you think about like where the Liechtenstein stands at the moment in terms of like crypto regulation?
I think that's a perfect example. When you think about what are custody services and which one should be regulated. We started the work group in 2016. So in 2016, the Liechtenstein government really put a lot of efforts in thinking about regulation and had and we ended up with having now a very comprehensive approach. So since 1st of January 2020, our Blockchain Act is in force, and that's way more than just regulating, for example, ICOs or security token offerings, or that is, they will focus on digital securities. So we actually analyzed the whole legal framework we have, and we said, okay, Liechtenstein wanted to provide the legal framework for the token economy, and said like, okay, we will play all of these use cases we will think of, and then try to identify the area where you don't need to regulate. So for example, self-custody doesn't need to be regulated. If you want to store your own keys, if you want to deal with your token your way, it's your thing. There is no risk actually where our lawmaker actually, or our parliament said like, okay, we really have to protect the users, for example. So we did that with a lot of areas actually, with the areas we identified to provide the legal framework for the token economy, as I said. And therefore we also amended our corporate act, we amended other laws as well to provide this really comprehensive legal framework. And therefore, for a lot of questions which arise now, for example, NFTs, we discussed that in the work group. I mean, that's something which is not new for us, like, or DeFi, centralized exchange, decentralized exchange, all of these issues we discussed. Like, for example, we also, coming back to the last example we had, is custody. We differentiate between two types of custodians. One is the custodian who just provides actually a backup of the private key. We call it actually the key custodian. And on the other hand, if you provide this custody services, as we understood it in a lot of other jurisdictions, where you actually transfer your token to the intermediary and they provide the custody solution for you, for third parties, that's our standard custodian as we understand it. And we differentiate between these two because it's a different risk level you have. And from a technical point of view, it is a difference as well. But if you look at how, for example, how we defined our token, like our legal definition of a token, our concept of the token container model with representing rights, and how you actually build the bridge between not only the rights and the individuals, natural persons or companies. And on top of that, you get the legal certainty if you transfer a token, because we amended our civil law framework as well. So if you transfer a token representing whatever right, talking about NFTs, if you have an NFT and one unique NFT is representing one unique object, let's say piece of art, Mona Lisa, if you transfer the token, also the ownership rights to that piece of art is transferred. That's huge. Like, you see that now regulator, and it's like, it's not the regulators doing the law, like lawmakers around the globe, actually, they discover that like a lot of answers we already have in our act. I mean, if it's good or bad, if it's perfect or not, we will see, you know. But it is, I think, one of the most comprehensive, I'm sure that it's one of the most comprehensive piece of legislation for the token economy you find everywhere. And that's why, for good reason, it influences now a lot of other approaches. And for example, quite a lot of, even it starts with the definition of a token in MiCA, the Market Crypto Assets Regulation, is very similar to the one we have. And the concept that the securities world is already dealt with. So keep the securities as they are. Maybe I meant MiFID II just to cover them for some reason, but focus on the crypto assets. This overall concept is quite the same, and it's actually hugely different from as far as my friend Ali Reza is telling me in Germany, whereas but please elaborate on that. But my understanding is that even some crypto assets are treated like securities. And I think that is not like every jurisdiction has to find the way how they actually regulate it to find good solutions. And it's not that this is good and this is bad. It has to be suitable for the local legal environment, for the legal framework. And in the end, globally, and that comes back to your question, I think anyway we need a global approach, or at least an approach where you have big markets covered. Because for startups and for every entrepreneur, it's just if you have this hurdle of analyzing all of your targeted markets. For example, if you want to provide your services in Germany, in Austria, in Switzerland, it starts there. If you have, then it's a lot of work for lawyers, and sure, we are all happy to work, but in the end, this is not the idea, because if we have to have the single market where you can easily provide your businesses with, let's say, in all of Europe and in all of America and in all of Asia, and I think that's why we should have, and that's a battle of good concepts, and hopefully the good concepts, they actually prevail, but we will see.
Thanks a lot, Thomas, for all the information. I think you covered up all my buzzwords, which I'm going to use today for the rest of the time, another 40 minutes. But okay, now coming back to NFT, I think you already mentioned piece of art, right? Unique piece of art. But I have a question for Tim, because he's actively into NFT space. I mean, what do you think, Tim? I mean, NFT is a tool for money laundering, or kind of a wash trading, or there was a later last week on CNBC, another platform that OpenSea is doing insider trading. So on the other side, we are talking about long-term value proposition of NFT, while some always some bad actors are everywhere. So in the crypto space, bad actors are using NFT as a tool to make their black money into white money. I mean, what is your opinion here?
I definitely think that exists. It would be naive to think that it doesn't exist. And here I also agree that KYC and KYT can offer a solution for that, next to being regulated or licensed. So there, I think what we want to do is have some type of technical assurance, as in, I think my team is already talking to Pierre for performing KYT within our ecosystem around NFTs. While on the other hand, we want to see what also the legal requirements are of offering our solutions to businesses that want to dabble around with NFTs.
Then moving forward to a Pierre, I have a question for you. As Tim mentioned, you are working in analytic solution side, right? You are providing solutions to the clients and also for the government side. But I mean, how can you track NFTs when, I mean, you can create n number of wallets on Ethereum blockchain or any other blockchain, right? And you can just connect your Ethereum wallet on OpenSea. Then what's some sort of role here you can play where you can also take NFTs? And I mean, okay, now we are talking about KYC and KYT, right? It was also in existence in 2016 or 2017 when you want to buy Bitcoin from Bitcoin.de, as far as I know. So they were asking for KYC, but let's say once you buy something from your KYC address, right, on Ethereum or Bitcoin, but then you can transfer to any wallet, right? And there could be n number of transactions. So how, I mean, what sort of what level of transaction you can track it and give some kind of a report?
Yeah. So yeah, because we started with no tracking only one coin. So we tracking with Bitcoin. Then we started with the Ethereum, Ether, I mean in the Ethereum blockchain. So when the tokens appeared, so we had to follow now ERC20, and it's a need from the market. So we are we are working on NFT tracking. We are thinking about this, doing some research and development. But today, it's not a need from the market because there's no, as Tim just said, regulation is not clear for any crypto asset, and it's less clear for NFT right now. But we were able to track ERC20. We are able to track IOU for Ripple and the tokens on the toes. We are just launching the Tron coverage today, so we are also able to track tier 10, TRC10 and TRC20, I think. And and we are able also to track a swap between the currency or crypto Ether and the token. So it doesn't really matter how many transactions you have. It's just a question of time, a question of CPU that you will spend. But being able to track and to follow a swap between a token and an ERC token to Ether back to an NFT, we are able to, because we analyze the smart contracts methods, so the function of the smart contract. And so as we are able to track a decentralized exchange today, and it's even for us easier to track a transaction through a decentralized exchange than from Kraken, because Kraken is like a black box for us, because there are a lot of off-chain transactions. So part of the quality of blockchain analytics is the capacity to follow and to follow transactions, follow swaps, even potentially atomic swap between blockchains. We're also working on this to be able to follow if you are moving an asset from a blockchain to Ethereum. I think in the future we'll be able to detect this as well. And in terms of identification of wallets, it's already the case for Bitcoin. It's more the case for Bitcoin than for Ethereum. We are able to create any huge number of wallets, and we are able to follow some exchange platform having millions of addresses. So again, it's having the best technology to do that, because we need to be, I said before, in real time. So real time for a blockchain means for every new block needs to be integrated before the next block is arriving. And it's part of our mission statement today. Track any asset, track any type of transactions, and be able in the future, I hope, where there will be a need, there's a need for that, we will be able to we'll provide NFT, 721 and 1155, I think, ERC for NFT.
Understood.
Another
so basically, sorry, yeah, Tim. Sure.
Thing what we can also do on our end at the marketplace level is bring in self-regulation. So we have an open network for NFTs. Anybody that has NFTs on a specific network that we support, they can come buy and sell that. But we have a market verification system to verify the token contract. So we try to verify if that token contract is coming from a legitimate party or not. That's one thing that we do. Then also where users can report that certain transactions have not been classified correctly, or where that they see that there's an anomaly going on. So that in combination with KYT management and then later on KYC is something where we can bring in more transparency around the buying and selling of NFTs. But then again, last point, we're dealing with transactions, we're dealing with NFTs, but we're also dealing with traditional business platforms like e-commerce stores. Are we going to subject our end users to do KYC, uploading their identity verification to actually purchase an NFT? Versus a traditional platform that are selling physical and digital goods on a daily basis without blockchain technology, where they don't need to comply with such type of regulations? There we need to find a middle ground.
And I can add something very quickly, that we are also maybe able to identify the two wallets that seem different are in fact owned by the same person. So in fact that the secondary market is a fake. And okay, I'm selling to myself an NFT, pretending I sold it at a very high price, and we just heard this Snoop Dogg, Kozomi stuff maybe yesterday, and so some people try to hide behind the fake identity, but potentially you are able to detect they have the control of the same wallet. So in fact, it is the same person. It could be very useful in terms of the value or true value of the NFT.
But then my question comes to like, how can you identify like this both wallets is operated by the same person?
It will be okay, not in every case, but we are using for not Ethereum. It's not like working like this, but for instance, on the blockchain like Bitcoin, we can detect clusters, and we can also detect that the same signature, is based on the same signature behind the address. The addresses is used, so potentially there's the same person in the control.
Okay, then I'm coming to.
I have one question, Saga. A follow up. I think that's to Pierre. For your work, the difference, and if we stay within the standard, let's talk about ERC20 in comparison to ERC 721. And the real difference is that you have a token ID, for every NFT. And there's another function which is pretty simple. You can just call the function owner of, and it will get the address. So this is completely different from ERC20, where you cannot there is no such a thing as an identifiable one ether. I mean, that's just not the case. So you can track transactions, as you said, but that should make your life way easier, right? To track and identify.
Yeah, I hope so. Again, we don't provide a solution right now, so I don't want to elaborate and to say what you are able or not able to do. We are doing and also some R&D, and we are. But that's true that some, but users can be very smart and can maybe use or wallet providers can be smart as well, and so we will see if it's really easier or not, and what kind of issue will meet. But again, you're right, different. ERC20 and ERC 721 are different, and you really need to do some analysis of this. Yeah, sure.
So now, thanks a lot. So now moving further, I have question for Alireza. Everyone is talking about regulation, compliances, regulatory framework. So in what amount of a dollar or euro we are talking about regulation? Is this regulation is going to hurt a retail investor, or we are talking about some couple of digit millions or 2-3 digit millions? If you can tell us a little bit more about it.
Yeah, I mean, thank you, Saga, for asking me this question. I mean, what I miss here in our whole discussion, I mean, as I said in the beginning, AML and KYC is very important. But as you look at the Financial Action Task Force, FATF recommendations, one point which is very important, what no one is talking about, is the risk-based approach, which means that you should not put all the recommendations of the FATF and all the rules which we have of the MLD in place for all businesses. It has to be risk balanced, and the risk we are facing, I think we are putting crypto and the whole crypto industry on the table and saying this is all risky, which is in my opinion not true. I mean, the exchanges had in the old days already technical solutions in place to get the crypto which is coming from the dark net, or crypto which is coming from some Tumblr services and so on, and not accepting these and doing this kind of stuff in respect of KYT. But I do not think that also looking on the travel rule, which should be implemented, which is in my opinion, my personal opinion, total nonsense. This is not really. We should not put that on a whole crypto industry. So the rules which we have now in place, until the new anti-money laundering directive 6 is coming out and the anti-money laundering regulation is coming out, is actually treating crypto as it would be either depending what kind of token it is, but it is treating it like any other financial instrument and any other good, because we have rules for goods and we have rules for financial instruments. Rules for goods, for example, if you look at a goods trader, someone who's, for example, selling a watch, selling a piece of art or a car, this person, this obliged entity, the seller, should normally run this KYC check from the payment in cash from 10,000 euro upwards. Something like this we should normally also apply on crypto, but this is, for example, going to change in Germany and also going to change for the whole European Union, European Economic Area, which says payments from $1,000 or 1,000 euro upwards in crypto, even though this is not your client. So this is like a on an occasional scenario, for example, a crypto ATM, which is giving out Bitcoin or accepting 1,000 euro payment or above 1,000 euro, then you should run a full KYC, which is, in my opinion, not correct, because if you really want to do some money laundering, I would go and sell my car for, let's say, 9,000 euro and get and take this money, or other way around, buy some car and paying cash for 9,500 euro, and then go outside and sell it for 8,000 and get this money washed, you know. Or even better, you take a Ferrari, which is much more worth than 10,000 euro, and you swap it to a Lamborghini. In that case, the car seller doesn't have to do any checks because you did not pay in cash. You did a transfer of two goods. In that case, this seller of the car, the dealer of the car, is not supposed to run a KYC. But in the case when someone is then accepting for selling a car Bitcoin more than 1,000 euro, has to do this KYC check, which is nonsense in my opinion. So coming back to your question, right now the obliged entities are normally regulated institutions, or in that case a goods trader, which is not a regulated institution, but with certain thresholds, and the thresholds are going down in the future to 1,000 euro, $1,000, which is actually not that high. And you have to do it for your contracting party or for this occasional situation, any transaction above 1,000 euro, which would eliminate most of the retail transactions, but still would put a KYC requirement. And once we have the travel rule in place, all of the thresholds are not relevant anymore. The obliged entity has to do the KYC check for the outgoing, incoming transaction for the own client, but also for the sender or the recipient of the transaction, which is, as I said in the beginning, nonsense.
Understood. I think also, like in the same jurisdiction, two different entities have the two different opinion on Bitcoin. Basically, like if I talk about like CFTC, they consider Bitcoin as a commodity. On the other side, the same country, same government, and they like IRS, like Internal Revenue Services, they consider Bitcoin as a property. So I'm definitely agree with you that like there is some, I think that either way, this whole crypto industry is getting attacked by the regulatory side, or on the other side, they just don't have like proper overview, or somebody just have to go there and educate them. What the Coinbase announced today, like yesterday, they announced like they are just aborting the like a land product, which they were like about to launch in upcoming days, but SEC was trying to sue them. So they just like, we abort. And today, like CEO of Coinbase say like, okay, we are going to educate the like SEC and regulators, like how we are going to offer. So is it some kind of like a right approach, Thomas, or they are just going neck to neck with the regulators?
I think first of all, it's not something specific for blockchain and crypto that tax authorities and other authorities treat, for example, Bitcoin or something like that differently. Like in quite a lot of areas, you have from a tax perspective, it's a different treatment than from, let's say, just a civil law or a regulatory point of view. So that's not something which is which only happens with blockchain and some cryptocurrencies. And I think, again, let's just maybe try to say what or to finish what Alireza said. I think the problem here is, and the travel rule is a very, very good example. The problem is that within our banking world, we have like very standardized processes. Why? Because if you want to interact between each other and the intermediaries, they want to interact with each other, they have to rely on same standards, as we do in the blockchain world as well, but it's a little bit more complex there. So the IBAN system and how we transfer money within the banking system is highly standardized. And there's one way of doing it, basically. Within crypto, it's different. Like Alireza already said, like you can have, what if you have a multi-signature transaction? When is the transaction final? If there's anyway something which is finality in the crypto space is not really possible. So and the problem is that even if and I don't say that regulators are mean and they don't want to regulate it properly and find a balanced approach. It's just not that simple. I think that is the whole problem, you know, that it's really so complex. And imagine like now we have like 1,000 ways of doing things with I don't know how many platforms or layer 1 protocols. And the problem is, if you start to think about regulation, this will take you months to years, even if you're very fast. And imagine that there's a saying like blockchain years are like dog years, everything is 7 times the speed. So in 1 year, we will have a different ecosystem. We will have new protocols. We'll have new way of doing things. We will have like, the next big buzzword, as you said, where we are focusing on. And I feel that this lawmakers and regulators very seriously, because it's really tough, like to find solutions. And what Alireza also said, there are recommendations for a supranational authority like FATF, and they will tell you like, this is our recommendation, implement it as you like, but these are actually the guidelines, and you should stay within the guidelines. And sometimes like countries are just overwhelmed and say like, we cannot find good balanced approaches because we just cannot. It's not possible, you know. But we have to do that. And I think this is really the problem we are all in. Like it's not that easy, and it changes over time, and time is 7 times the speed as we are used to, and it's highly complex. It's like you have to understand the technology, and then in the end to say like there's a lot of pressure to do things. It's hard. I fully understand that, but on the other hand, we have to raise our voice that like don't destroy what we have. Like this combination of technologies, what we have now, is really, this doesn't happen every 3 years. I mean, I'm turning 40 now, but like, if I look at my history, I'm not that old. I don't know. I don't feel old still, but in the end, like this I think really like we are living in an area or in a time where something really big is happening, and we are in the middle of that. But don't just stop it because you don't understand it, or kill it because you are afraid of it. It takes time, and that's what I try to tell people, especially in the compliance part with travel rule. That's such a good example. Step one step back, think about what's the objective, what do you want to do, what's the goal. Yeah, nobody wants to have financing of terrorism or money laundering. No serious people can support that. I mean, we all agree on that. We have to address these problems and issues, but do it properly, and don't stop innovation in that area. Sorry, I think
no, I think you are
a little bit track.
No, but you answer properly. But I have another question for you, Thomas. But maybe Alireza, there's like some question regarding this BaFin paper. Maybe if your link from Google, if you can share it, there's some question coming from audience, and Alexandra from my team is just posting the questions there. So maybe your link, you can post it there. The last one, which you said, like the one, I think. And now coming to you, Thomas, like, then if you can explain briefly like what exactly is travel rule, because I think in our audience many of the people that literally don't know like what it means for. Of course, like you can Google it always, but as you are here, so I would like to ask you. Okay,
I will try my best to keep it as simple as precise, that everybody has a glance of what it is all about. So there is the recommendation that every state has to implement something which is known as the travel rule, and this is not something new. We have that in the banking sector, and the basic idea is that if you are a service provider, and they call it WASP, so virtual asset service provider, if a service provider, a client of a service provider or a user of a service provider wants to trigger a transaction, maybe a withdrawal transaction, the WASP has to check if the recipient address is also a WASP. So for example, if you have a cryptocurrency exchange A, and the client of cryptocurrency exchange A wants to transfer 1 Bitcoin, for example, to Alireza's account at cryptocurrency exchange B. The cryptocurrency exchange A of the sender has to check whether the address belongs to a WASP. And here, and if yes, they have to exchange information about the recipient, about the WASP. And we can all imagine that, yes, this is possible within the banking system, because if you have an IBAN, you also know what's the bank operating that IBAN. It's very easy to do that. And you have you can even approach them and tell them we need this and that information. But think of how a blockchain transaction works. Start with Bitcoin. I mean, you don't know who is behind an address, even if it's a WASP or not. Yes, we all know there are some information about like the major addresses of major exchanges, but it's not 100. Like it's you don't even like know for I don't know 80% or 90% of all of the addresses. So the problem starts there. If a WASP wants to comply with that rule, the problem is that they have to check before they do a transaction if the other party is a WASP, and there is no complete database, as I said. So what is the solution the industry is working on? And Pierre can maybe add here, but there are a lot of approaches, but in the end, you always have to have some information of who the addresses belong to. And we are creating honeypots here from a cybersecurity perspective. That's just crazy. I mean, we have a decentralized system where we end up with now building up local, centrally organized databases with all of the addresses belonging to WASP, because how you can attack or how you can solve this problem is actually, it is possible. You go there and say, okay, like if a WASP wants gets an order to transfer to address, to the address of Alireza's exchange, then the exchange will check in the database if this address belongs to a WASP. And that's easy. I mean, if the address is registered, then it's easy. Then he can check that. But the problem is that we don't have that database. And that's the whole deal. Like as for now, we don't have the database. They are building on it. There are projects like OpenWASP where you can register all of the addresses, but we are not there yet. And now we are talking about the timeline, and that's what I wanted, or what I briefly touched before. The problem is that this is enforced in Switzerland already, so it is enforced. It is enforced in Singapore already, and it is enforced in Liechtenstein since 1st of June. So the thing is that you have now a piece of legislation, or at least because it's implemented in our legal framework. Talking of Liechtenstein, so you have to comply with this rule. But from a technical point of view, it is almost impossible. What you can do is you can just shut down all of the transactions where you don't know the recipient address, which means you're out of business. That's for me an example where you see, like, okay, yes, we have to address financing of terrorism. We have to avoid money laundering for sure. There's no question about that. And this is a proper way of doing it in the banking sector. But is it for crypto? I don't think so. That's really not the idea.
Yes, I'm coming back to you, Pierre, but I have like just one question for Alireza specifically, because Thomas talked about WASP, which is like a virtual asset service provider. So does like a DeFi, like decentralized finance, like exchanges fall under the WASP or no?
That's a very good point. If you have a really 100% DeFi, which is really decentralized and which does not offer any because you look always at the activity, and the activity has to be some activity either of a goods trader or of a financial services provider of a bank. And if you're not providing such services, you do not do any brokerage business, you do not do any execution only, you do nothing in that respect, then you're not an obliged entity, you're not a WASP, you're not whatever, and therefore you are not obliged to do to comply with the anti-money laundering rules and KYC rules. Even I think it was a FinCEN, was the SEC, which said we could look at those who draft the protocols of the DeFi, and even those who do the protocols, they are not WASPs, they're not obliged entities. However, we can now also see or face that the DeFi world is working on some solution where they can at least run kind of a KYC light and do it on a self-regulation, from a self-regulatory perspective. But from a legal perspective, I would say they're not WASPs, they're not obliged persons under the AML and KYC rules.
Understood. So Pierre, go ahead, and then once you make your point, then I have like another question for you, like how blockchain analytics can help in travel rule.
Yeah, and so part of so I can almost answer to your next question. Yeah, I fully agree. Yes, with Thomas, you can say that travel rule is a bad answer or wrong answer to a right question. We have to identify people to fight terrorism and stuff, and all bad stuff in the world. But you're fully right. I can go on Kraken. I can create as many deposit addresses as I want in a few clicks. And it's quite impossible to Kraken to broadcast in the real time that I have 20 new addresses are now belong to Kraken. And also for us, if someone is creating a brand new address, there's no way before we clusterize or before there's a new transaction, there's no way to identify it if it is a private wallet, if it is a custodian or wallet which belongs to an exchange. So I think they'll just try with Travelrule, just try to replicate what is existing in the financial sector to the crypto world without understanding the technology. And this is a lack of knowledge this is why we have to educate. I don't blame them. It's quite difficult and we have to discuss. And because if you do proper KYC and if you have a KYT, you have Travelrule. Because if all the banks are applying a proper KYC policy, we know who are behind the addresses. And with analytics like us or like some competitors, we can follow all the transactions. So we are even able in 5 years from now to retrieve who was behind this address, this wallet, who benefit from this transaction. And also time is working for us because information that you cannot get in real time, we are able to build them because we are aggregating more and more information. So it will be better to do some checks in the future because we will be able to provide more accurate information. So again, if you have to follow a case or to follow bad people in a few months, it will be easier. So we don't need some kind of real-time centralized or pseudo-centralized Travelrule as it is designed today.
I'm not saying that it is not happening. That's a disclaimer first, but I really think that it's not a very clever idea to use, for example, Bitcoin or any public ledger for really like criminal actions and whatever. Because as you said, if we don't find them today or tomorrow, in 3 to 5 years, we'll find them anyway. Or what you have seen, like in, for example, in this parity hacks, situation where the Black Hat hacker group had withdraw funds from several wallets. I mean, they're still there, like they cannot use it. It makes no sense. So I think, yes, there are others, but is this really like the big problem we have? I don't know.
But on the other side, I would like to make a point from my side, which is like globally businesses spend around like 400+ billion euro or dollar each year on compliances, right? And like new risk and compliances group, including like KYC and AML things. And let's say like if we see like crypto industry, we have like 10-12 years of history, right? And since let's say like even 10 years, like 2011 was like initiation of like first Bitcoin was mined. So basically the way earlier, I mean, it exists like AML. I mean, the money laundering and terrorism is existing since a long time, right? And everyone knows that the main terrorism financing, I would not like to make any kind of controversial comments here, and I'm not the right person to make any comment, but I mean, these things exist before, way before the initiation of like inception of the Bitcoin, right? And so now coming to like CBDC, Thomas. So do you think like in the whole world, if I talk about like broader way, while like a digital euro or like digital USD, central bank digital currency, by introducing this kind of thing, can we really remove this like all money laundering activities from the world?
If you want, as I said, if you step one step back, think about how you can really solve these issues. If you build it in the layer 1 protocols, you can have transaction monitoring, and everything, like you have built-in compliance within every transaction. That is possible. If that's a good thing, it depends how it is implemented. And I think that is one of the ideas how you can actually address these issues, because what's on the other side of the balance? Like we want to avoid these bad things, and on the other hand, it's our privacy, and you have to balance these two areas. Like to simplify a little bit, but yes, and CBDCs, like if you build that in a proper way, and you build in within every transaction these checks, I think it is possible that, or at least it's an area where we should put some efforts in. And then talking about privacy, there are states issuing CBDCs where I would be considered about privacy, and because I'm always considered with privacy when we have digital transactions, and there are states where I am really considered about my privacy. And why is that the case? Because like everything will be completely transparent. Like you see it already, and even if like governments, they don't care about this information they get, and we already heard, like you are aggregating information, Pierre, for providing services. If you have like a CBDC and you have like all of this information of every transaction of every user with every merchant and everything, and like if you then add also this compliance, like, okay, it depends if the person is buying a piece of chocolate in comparison to buying a weapon, you have that information. If you aggregate all of this information, even if they don't want to do that from day one, yeah, there might be some ideas that sooner or later, this is interesting. I mean, it's just this amount of information is really interesting. So we don't know where this ends up. So I'm really I'm advocating for think about privacy. Privacy is really an issue. We have to, if you think about implementing this, and that might be a solution, but if we do that, think of the privacy of everybody, because if we don't do that, I don't know where will it end up. It's at least something which I'm really considerate about.
Understood. So moving further, I have some questions already, but we have already 5 minutes left. So I will try to cover as many as possible. So like a team coming to you, like regarding the WASP rule, right? And like travel rule and WASP entity, as Alireza mentioned, like €1,000 above. So when it comes to transfer the NFT, I mean, NFT market is not really liquid like a crypto market, right? But then how do you consider, I mean, you are the marketplace provider. Wendley is like having like a couple of 100,000 users on your platform. So how this will, I mean, how you will implement this kind of laws on your platform? Like anyone can say like my NFT is worth like $2, $5. There is no any kind of like a stamp where we can put like, okay, this NFT costs like 1,000. I mean, we see like crazy number of CryptoPunks getting sold for like $250,000. This is just one JPEG, some people think.
Yeah, how are we going to implement VASP on top of that? Well, if it's within our own marketplace, then yeah, that VASP would not apply because everybody is trading internally. But yeah, actually, I would have no clue. I would have to talk to Thomas and Alireza to figure out how we can actually look at the regulation, what is the goal and the reason behind it, and then see what is the risk assessment of complying to those regulations.
Understood. Alireza, would you like to comment on specifically on NFT case?
I mean, the NFT case, it's actually a nice case because for those who are looking into the MiCA, the new draft of MiCA will most likely exclude proper NFTs. I'm not talking about fractional NFTs, but proper NFTs will be excluded from MiCA. On the other hand, the German regulator has drafted an internal some internal understanding or guideline paper, which is not public yet, where it qualifies an NFT at least as a German crypto asset, but most likely also as a German German investment asset, which is a specific asset similar to a security under MiFID, which is regulated similar to a security under German law, but which is a specific German regulation. And this makes this whole thing very interesting because I'm dealing with a couple of German and international NFT issuers and traders, which believe, yeah, it's an NFT, it's not a security, so it's not regulated, which is not true. It is regulated, and it will be regulated under specific domestic regulation. And this is a pity actually, because the MiCA, which is going to come, should usually cover all crypto assets, and if they're not covered by MiCA, they shouldn't be regulated by any jurisdiction. But however, now when the MiCA says NFTs are not inside the MiCA, at the same time, it gives room for domestic regulation to regulate it. And this brings us again where we are, or where we were in the past with crypto assets, that we will face with NFTs, different regulation with different jurisdictions.
Understood. So I think I also wanted to make some more questions based on Mika, but as we are running out of time, so maybe in next panel. But my question comes to Pierre. Maybe you can summarize in like 20, 30 seconds, like how do you assess like a threat intelligence, and like do you have some kind of classification for the risk scores when you are doing some like wallet transaction tracking? I mean, you must have some like traffic lights kind of system, right? At in the blockchain analytics, which like this address is like green, yellow, and red.
Yes,
if
yeah.
You can explain.
Yeah, quickly. So we are able to rank addresses and wallets from 1 to 100. One is very bad and 100 good. So there's many methodology for that. We are obviously monitoring a lot of lists, public, private sources, like the OFAC list, for instance, but a lot of others, working with providers providing us with addresses from darknet, and working also us. We are doing transactions with exchanges. So we have a data team as well. And so some AI also, not to detect some patterns. We can also detect some behaviors like big chains or some kind of mixing patterns. So it's an aggregation of maybe 20, 30 methods or processes, and then we are able to try to evaluate a score. And good also to say that our customers are able to change a little bit, and if they want to lower the score, they're able to do this on their side as well.
Thanks a lot, Pierre, and thanks a lot all the speakers for taking your time, and specifically special thanks to like Alireza and Thomas for taking time from their conference Money 2020 in Amsterdam. But in conclusion, I would like to say, like the wise man said, like it is really hard to track the cash full of briefcase than rather than on the crypto chains, because blockchain ledgers offer clear benefit as the chain would maintain records of procedures and compliances activities for each client in a secure and immutable way. I think blockchain is here to stay, and there's unfortunately we are running out of time. But once again, all of our speakers and all our audience, thanks a lot for joining and taking your time. And for more news, you can follow us on LinkedIn and Twitter. Until then, stay safe and see you next time.